We may come across financial statements which are prepared under different GAAPs. GAAPs stand for Generally Accepted Accounting Principles, and the presentation of the financial statement depends on the GAAP that are followed by the entity. Suppose an entity prepares financial statements based on US GAAP. The, the presentation of certain items, especially expenditures, may be different as compared to the entity which is preparing financial statement based on the IFRS. So, in this video, we will be discussing the major variances in specifically in respect of expenses, specifically in respect of expenses in IFRS, US GAAP, and the Ind AS. Let's go. So, expenses may be classified as function or by the nature. For example, cost of sales, administrative expenses, selling and distribution expenses. These are certain functions which are performed by the entity. The entity operates to sell some goods or the services, and all the expenditures that are incurred to sell the goods and the services are clubbed under cost of sales. In respect of administration, all the expenditures incurred are clubbed under administrative expenses, and so on. The another classifications can be based on the nature. The nature can be cost of goods. Pardon, cost of consumption of raw material or raw material consumed, depreciation expenses, salaries and other benefits that has been paid to the various employees, other expenses. So these are certain expenses that are based on nature. So, so major gap provide two classifications. Either they can follow functions or the nature presentation of the financial statement, presentation of the expenses. So let's start with the IFRS. What IFRS says in respect of the presentation of expenses. So IFRS allows both methods. The entity can either go for disclose presenting expenses based on the function, or either they can present based on the nature. However, a hybrid disclosure is not allowed. What do you mean by hybrid disclosure? They may disclose some of the expenses based on the functions, for example, cost of sales, selling and administrative expenses. And again, they're disclosing expenditure. Again, they're disclosing some expenditures that are based on the nature. For example, depreciation expenditures. Say, I'll give you one example. Sales less cost of sales less depreciation. This is basically not allowed because depreciation expenditure also form part of the cost of sales. Some of the I'm assuming it's to be a manufacturing organization. So depreciation expense do form part of the cost of sales, and if you're presenting like this means that you're following a hybrid approach which is not allowed under the IFRS. And the second thing is, if an entity is presenting its expenses based on the function, it is required to provide in the notes and additional disclosures regarding the various expenditure that have been clubbed under the cost of sales, under the administrative expenses, and specifically they told about salaries and administrative expenses, depreciations. So there are two type of expenditures that need to be separately disclosed in the notes, that this much amount has been clubbed under the cost of sales and the selling and distribution expenses. In case of US GAAP, I'll tell you one thing. SEC stands for Security Exchange Commission. SEC requires all the registrants to follow the sorry the function approach. They require all the participants to disclose the expenses based on the function rather than allowing them to disclose based on the nature. In case of Ind AS, when any entity which is following Indian accounting standard, they are required to disclose all the expenses only based on the nature. They do not allow the expenditures to be disclosed based on the function. So these are certain major differences that I can say. And one more thing. Under US GAAP, if an entity is applying US GAAP and they have to, and they are an SEC registrant, which means they're basically a listed company, primarily a listed company. Then in such a case, they have to apply the function approach for the presenting expenses. However, they can separately disclose depreciation expenses. They can separately disclose the depreciation expenses. However, they are not allowed to use the term called gross profit, and they need to add one suffix, which means cost of sales excluding depreciation, which means cost of sales do form part of the depreciation, pardon me, depreciation do form part of the cost of sales. And if your financial statement is separately disclosing depreciation expenses and which is not included in the cost of sales, you have no right to disclose the term called gross profit as a subtotal. So in the nutshell, you're allowed to separately disclose depreciations from the cost of sales, but you cannot use the term called gross profit. So this is basically all the disclosures, all the presentation requirement for the expenses. Let's let's focus on some practical areas, and let's take the discussion further and let's have a practical application of what we have studied in the earlier section of the video. We studied that under the IFRS, the expenses can be presented under by both nature or by the function. So I've jotted down and I have downloaded one financial statement that is prepared under the US GAAP. Now we can see that the net sales, cost of sales, which means it's a function of the business, which means they are presenting the financial statement based on the function. Then finance income, finance cost, other operating expenses, royalty and commission income. So these are classified, or all the expenses have been presented in the financial statement based on based on the function, which is allowed under the IFRS. Now let's understand about the US GAAP. Under the US, this is a financial statement that is prepared under the US GAAP. In the previous video, we studied that in the US GAAP allows only one method for all the SEC participants to to present the expenses only on the basis of the function. So the function is cost of revenue or the cost of sales. Under cost of sales, for automotive sales, this much amount of expenditure have been incurred. For leasing business, this much amount of expenditure been incurred. And the same for the R&D, this much amount of R&D expenditure been incurred. For selling and general administrative expenses, this much amount has been spent by the entity. So these disclosures, these presentation of the expenses are based on the function as allowed by the US GAAP. Now, third, let's discuss this is a financial statement that is prepared under the Ind AS. Now, we discussed that under Ind AS there is only one classification, and the classification should be by nature. All the expenses should be presented in the financial statement based on the nature of the expenses. So, the expenses, nature, employee benefit. These employee benefit can be for administrative expenses, can be for cost of sales. We don't know. So, this should only be based on the nature of expenses. Cost of technical subcontractors, traveling expenses. I don't know for which purpose they have used the traveling expenses. It may be for the administrative, or it may be directly related to the business, directly related to the generation of revenue, that is cost of sales. Depreciation, amortization expenses, and consultancy fees. So this is a financial statement that is prepared under the Ind AS, and all the expense classifications has been done based on the nature of the expenses. Thank you.